Ryan, do you think Kalshi being like federally regulated is a decent moat? Or is Polymarket pursuing that as well now?
No. I don't think it's an actual moat.
Do you think it not being on chain is a moat?
No.
I question if it being like a centralized authority makes it easier, because like most prediction market users in this like ideal scenario we're painting out probably don't care about the on-chain aspect at all, and if anything, it just introduces more complexity.
What's up, everyone? Welcome back to Shoot the Shit Pod number 20. I'm your host, Matthew Ney, and I'm joined here by the Enterprise team with Ryan, AJC, Sam, Corbin, and Dylan. Today is February 10th, and we're going to talk about all things prediction markets. Have volumes topped after a pretty insane weekend and days leading up to it with the Super Bowl, and talk about, is the degeneracy thesis still alive? But we're going to start with looking at some of the volumes. Over the weekend or the last week, there was about $6.2 billion in volume across all prediction markets, including some on chain. And a lot of them have come from Kalshi and its connection with Robin Hood. If you look at what type of markets people are doing, it's a lot of sports, especially when you talk about Kalshi. Over in Polymarket, it's about 50-50 sports and still election data and a lot of politics stuff. But let's start with a pro prediction market thesis outlook. So I'm going to kick it over to you, Ryan, first to give the bull man and why we think prediction market volume, open interest is going to continue to rise from here.
Sure. I would say for reference, like my bull case is like pretty longer term. Like I do think it's very likely prediction markets have like a short-term top here in volumes and OI, just because they pivoted very hard into sports gambling, and like you just had the Super Bowl of sports gambling, literally the Super Bowl. So there's going to be a lack of meaningful sporting events for a little bit. So I think you could potentially see like a local top in like sports-driven prediction market volumes. With that said, though, like long term, I don't even think like prediction markets are really like scratch the surface of what people are going to be gambling and speculating on. I think like just more broadly, as we've seen over the past 5 years, sports gambling has grown tremendously. I don't think that's going to stop. And I also don't think that trend is going to be isolated to strictly sports. I think people are just going to be speculating on every aspect of their lives. Like I don't see a fundamental reason why it's going to be limited to sports. People find entertainment in many things outside of sports, whether that's politics. You could argue that was like the actual breakout use case for prediction markets, was people wanted to speculate on politics. But I think the next big driver of growth is going to be the growth in like culture and entertainment markets. I think as people like become more familiar with these tools and whatnot, like you're going to see tremendous growth opportunities there. And I just think that we're in a super cycle of like gambling. Like people our age, people I know, just love gambling for whatever reasons. Unless like this is going to be mandated to stop by like governments, which again I don't think so. They seem to be incentivized to also allow this behavior to continue. We're gonna see gambling spread into other areas outside of just casinos and sports books, and into movies and shows and songs, and betting on whether Taylor Swift is gonna be the top Billboard leader for this month or whatever. So yeah, I think like if you take a long enough view, assuming that the political and regulatory winds don't change, like it's very easy to come up with a prediction market bull thesis that revolves around it seeping into other areas outside of just sports and politics.
Yeah. So I'm going to share my screen here, and we're going to look at this Dune dashboard. So Sam, over to you. Why do you think this chart here on the left of the weekly market notional volume is topping?
That's such a direct call. So weekly prediction market notional volume. I think like what Ryan said is pretty on the nose, that like they've gone pretty much, all the Kalshi and Polymarket have gone pretty much all in on sports betting, because that's the only market that market makers will provide liquidity for right now. There's just no other markets that you can really hedge on, and I think that's kind of a key issue with like scaling prediction markets here. We just saw Jump partner with Polygon, and it wasn't entirely clear how, like, if there would be rebates or like token payments involved or one way or another, but like I have to imagine that they're essentially getting paid to market make, and that's just not sustainable. I mean, that can work for a while. There's like no doubt. I mean, like Polymarket has a lot of money right now, So I wouldn't be surprised if like we just see like a ton of rebates in like maker volume, but ultimately like try and use these like Polymarket yourself. It's I'm regularly not getting my orders filled on like long tail markets. There's a major lack of demand. There's a massive amount of insider trading going on. I think deterministic markets where they can be like affected by like human outcome, like whether like it's like someone like running on the field or something, or like even a game where it can be thrown. Deterministic markets are not scalable, or at least we'd like. I have struggled to see them scaling to the size that like politics or sports has like commanded. Like the
Yeah, I just did this chart where I deselected sports, politics, and crypto, and once you take out those three categories, the data tells a different story.
And so I think it's like great if from prediction markets we find a few more interesting niches. Like sports was great, politics is great. Maybe like there will be another like niche or two that pops up that a lot of people want to gamble on. I just think that like for me, there's a massive difference in like betting on a sports game versus betting on award shows. One is a game that like is like entertainment that's like regularly happening for like a team that like you love or like root for and like you're willing to like allocate money towards them. And the other is just like a once a year award show that like sure you might have an opinion on it, but very quickly it'll be revealing that you think you know more than you do. And I think that like the incentive is not really there to like root for people in the same way that it exists for sports or politics even. So I think on a lot of it comes down to the market itself and like how entertaining is the game and how much can it like really loop you in.
Well, a quick counter to that, like I think just like framing as like award show markets is like quite limiting. Like I don't even know if that ends up being the most popular. Like I would imagine like take like a super hype show. What's one that came out recently? Like Night of the Seven Kingdoms. Like I think prediction markets that will find success there are like ones that are like what is going to be the viewership for these episodes like week by week or whatnot. So I think like I think there's plenty of actual events you can do that are like not easily manipulatable or that don't like have like key man risk. Like even the awards I show I guess could get manipulated, right? Like if everyone goes super long on something,
like a non-deterministic market. I get it. Yeah.
Yeah. But like I do think there are non-deterministic markets in entertainment as well. Like I don't think HBO, for example, is gonna like manipulate viewership. Like that's probably illegal to do. Just like how throwing a game is illegal, right? Like you can't do that. So I don't think it's as nearly as big of an issue as people think it is, just because like the current markets today might be. But for example, like how would you game something that's like how many viewers is Night of the Seven Kingdoms going to have?
Yeah, I agree. Like the farms and things that you need to set up, like it's hard to imagine. But like what's the fundamental difference between like trying to like determine viewership of a show like Night of the Seven Kingdoms or watching a game or watching a political election? The latter two are entertaining, right? The other is just like kind of this tedious work that you're doing to like scrape dollars off the table. And you're hoping that your knowledge will like translate into like some like amount of like additional yield or something. But like ultimately, I think that there's like a very big difference in those two markets. And so that's why I say that I struggle to see like all these long tail markets. Like, and this is I think kind of like one of the fundamental differences that like Corbin and I have versus like your worldview of like what hyper gambling looks like. I don't think most people want to gamble on long tail markets like that. I think that like the amount of people that want to gamble, like they express it through sports and they'll express it through politics, but I don't think they necessarily want to bet on everything in their life. I don't think they want everything to be hyper financialized, and that's just like a hunch, like a speculation. Like I don't think that like we can confidently say it's one way or the other, but like I relate it somewhat to like Zora and like putting a market cap on people's like social profiles and things like that. I just don't think that like people want every aspect of their lives to like have a dollar assigned to it or to be financialized. I think that there's a subsect of people that want it. You tap into them really well with like sports gambling. And I think that like we're somewhat on the euthanasia roller coaster as we go down. And prediction markets are really trying to see like how big is that long tail. And I just don't think it's going to be as big as they expect.
I think the long tail is very mimetic. Like why do certain memes gain attention and go viral? Like there's no like intrinsic fundamental reason. And in that same way, there will probably always be long tails that gain attention and gain value. I guess like the question is just like how much will those grow relative to sports and gambling and other fathead markets? And that's uncertain at this point. I think like the bull case for the long tail is actually more in agents and like taking hyper specific views in the world where you can like combine various long tail markets in order to like take just like a very specific prediction. Like I think that the 49ers are going to have a snow game cancellation, and you like aggregate markets across weather and sports and other things together, even if there's not a specific market for that. So I think that's where the long tail might go, but it's honestly too early to tell with agents. And then like I guess like another question is just like, does it matter? Like I think Kalshi and Polymarket can grow just on politics and sports, and those are massive markets that can just, both tap into existing market share and get more people, especially with crypto where it's permissionless, you get global access, and there's just more capital coming on chain through stable coins. It might not even matter if the long tail works.
The steel man or the counter argument to that, though, and I said this on a call yesterday, was we've been able to sports bet for forever. We also all grew up playing sports, and like we know like kind of how to bet, like what the over under the spread is in a football game, and like been around that, and like are somewhat, probably we're all not all or full time gamblers, but like it's fun to throw some money on a game here and there, especially with the apps getting better and the ease of access just with DraftKings, FanDuel, and so like the parallels for those that market has been a lot of crossover and pretty easy to go in sports bet. And so like when you introduce sports betting with Kalshi and Robin Hood and just getting it in the hands of users is a lot easier. But the Grammy nomination markets or the like who's gonna die in Stranger Things type of markets, like those haven't been around. People haven't been able to get good at those. And so like that's where I see now that it's open, people are gonna go and get better at those, and it unlocks a whole other type of market where like maybe you were a huge movie nerd and have been following movies and box office openings for forever. And now you have a way to go and actually like earn on that knowledge that you've accumulated over the last 20 years, but you haven't been practicing actually betting on them. And so that's where I think those grows, and it's just a completely different market.
I just don't think the average person wants to gamble. Like, I think we have a natural predisposition to gamble because we're in crypto, but I'm kind of overall short the degeneracy thesis. Like, my friends that aren't in crypto, they like love sports, they're really interested in politics, but they have no interest in gambling on it whatsoever, or placing bets.
I mean, I have the opposite experience.
Yeah, I know.
I have tons of
I also do.
don't buy crypto,
But it's somewhere else.
gambling every day on,
But I would
DraftKings.
just expect the overall volume.
They do take bets.
I would expect the overall volume to be a lot larger, though, considering how much paid promotion they're doing. Like in the depths of the bear market in 2022, the average weekly DEX volume was 27 billion per week. Now, with all the paid promotions going on, Logan Paul, doing that video $1 million bet during the Super Bowl, and the average weekly volume is 26 billion in prediction markets, or sorry, 6 billion. That's like a fifth the volume of DEXs during the bear market. And I would just expect it to be a lot higher if that many people had the urge to gamble.
But
Well-
like, isn't that comparing like take like equities trading to like the hundred? I don't know how many billions of dollars that are gambled on sports globally. Like it is a smaller market, but it's like that's because like crypto is more like a real financial market where there's depth, where there's like institutions, where there's trillions of dollars in potential capital that could come in, versus like gambling is like not quite a financial market where not everyone's speculating. Some people are investing, some people are just trading, and there's just volume for various reasons, hedging, derivatives. So like I feel like those aren't like great
Well, that's my argument, is the overall growth is limited, is going to be, all I'm saying is I think it's going to be maxed out a lot sooner than people are predicting. And I think there's just a lot of euphoria around prediction markets. Like Uniswap does significantly more volume, for example, and it's trading at a 3 billion FDV, and people are saying Polymarket is worth,
Let's take the thesis that like all financial markets are moving to prediction markets, which is like what a lot of these VC funds are underwriting. So like, enabling like a hedge fund to trade like this is how many bottles of Coke that will be produced this year versus just like this is where the stock's going. Like and then like tons of hedging and derivatives off. Like if that's the actual TAM, like don't you think that's way larger and it actually goes just straight into, like financial market TAM versus just gambling?
I don't think
TAM?
that's the TAM though. Exotic derivatives for hedge funds already exist.
There are a ton of things that funds can't hedge and can only gain exposure through an equity price, whereas they're really speculating on certain inputs and outputs through the equity price when they really just want to be speculating on the input and outputs themselves.
I see what you're saying. Like as a hedging tool, it's interesting, and I also could see like demand from like hyper specific funds that specialize in this and that specialize in getting the knowledge. Right? That's interesting. And there's probably good yield opportunities that are like differentiated or like uncorrelated from other markets. But I do feel like that TAM is not necessarily proven out yet. We don't really know that there's demand from financial institutions to do that. We don't know that there's demand for like that as like a hedging tool or that it would even be trusted. So I think it's just like too soon maybe to say that that's a legit use case to value these based off of.
Would you not say that jump coming in and providing liquidity for some of these markets is not a step in that direction?
Maybe, but they're also being paid to, so it's not organic. So to me, I just take it with a grain of salt.
I would say the bigger issue is the apps themselves suck compared to DraftKings and FanDuel. I am a crypto savvy user, and half the time, like I can't even get Polymarket to work. Like it's actually so bad. Like I had to go to like I ended up using Bullpen because like I could not get the Polymarket to work. So like I would not like over index on like current usage just because like if someone in America that like sports gambles like wanted to go use Polymarket, they would not be able to. Like it's just not good. The UX is still atrocious. And like unless you think that like fundamentally Polymarket UX cannot improve, I would not be like over indexing on like current usage rates.
It's not that I'm indexing very hard on like current usage rates necessarily. It's just that if we're valuing these companies at tens of billions of dollars or $10 billion or whatever, I think that there needs to be like some clear like demand drivers if they don't exist today. And to me, I don't really see proven demand for the long tail markets. I don't really see proven demand for the hedging tool strategy or like hyper specific fund stuff that like Dylan was just talking about. And so for me, it seems like we're kind of taking these moon bets as we've valued it as though they will like pan out. And I just don't really see it happening.
I strongly disagree on like there's been no proven demand. Like even the volume chart, once you disincluded like politics and sports, like has seen tremendous growth. Obviously, like
but it's insignificant
because it's starting from zero. Like you've never been able to bet on these things before. Like I just pulled it up. Like the mark. Can I share my screen on this?
Go for it.
Sweet. Like take a market like this. Like how much will it snow in New York City? Like you have never been able to bet on this before, and yet like that market was able to pull in like 1.5 million in volume. Like do you think the next big snowstorm is going to have like more or less volume on this? Like there was no incentives to do this. Like I just think this is like an interesting niche that I think it's silly to say like, oh, these interesting niches have topped and they're never going to grow, when it's like there has never been a way to like coordinate capital to like actually like bet on these micro niche markets. And sure, like maybe the total like growth vector for like New York City snowstorms is extremely small, but like there's arguably like millions of these interesting niches, and like I think like the long tail is actually like where most of the growth for these prediction markets is going to occur. Like once you actually have good UX, right? Like DraftKings, FanDuel are not going to be able to offer markets on this. They're not going to be able to offer markets on like will Taylor Swift be tops on the chart? Will this show be able to like
why not
eclipse like 1 million?
Why can't they just pivot to the prediction market model?
I mean, I guess they technically could just like go fully prediction markets, but they're not gonna. Like that's not how they operate. Like they are the house, right? Like they need to underwrite the risk for all these markets themselves. I just don't think they're going to be willing to do that. I think they're going to move too slow. They're massive corporations. Like I think prediction markets, that's where their actual edge will lie. Like that's how they can actually beat these bigger companies, is that they're just going to be able to offer markets that people do actually want to speculate on. And I think just be like, oh, well, because there's very little volume today. It's like, well, you have never been able to bet on what a snowstorm in New York City is going to do. And yet, like, the first time this was possible, for a snowstorm that wasn't even the grand scheme of things, like, the biggest snowstorm New York City's ever seen, like, was able to generate, like, 1.5 million in volume. Like, I think that is a good example of, like, the possibility here.
Yeah, I mean, I get what you're saying. I think I disagree with you on like the long tail market stuff, but something like weather is interesting because it's like non-deterministic and there's just no way to game it. But I also think that we will probably see more interesting long tail markets come up and become popular, similar to politics and in sports. I'm just not confident about how much demand there will be. But I also, again, think that liquidity is going to become a massive issue. Even if these do scale to the size that you're saying, if we constantly have to like shell out dollars or sell tokens or something like that to just get the liquidity there to match large orders, that's inefficient. That's not sustainable, right? So I don't know what the hedging solution is yet. I think it needs something that probably needs more attention, like the UX. The UX definitely needs attention. Polymarket is very difficult to use. Also, like the advertising, like I think there's just a lot of issues here, and it's somewhat layered. And I think people are just kind of blindly optimistic about prediction markets because relatively there was less interest in consumer apps over the last year. Those kind of stuff.
Yeah, I guess a good next step in the conversation to go to is like talk about that UX and like the growth from here. And we see obviously a lot of the Kalshi volume is from the sports integration with Robinhood. But we know or have heard rumors that Robinhood is building their own prediction market platform and like might turn that connection to Kalshi. Coinbase is building out prediction markets in their app, and obviously I think they're going to have a better UX than the Kalshi app currently is today. But Coinbase could follow and also build its own prediction markets. You also brought up what happens if DraftKings, FanDuel kind of brings their UX and users over into their own prediction market a platform or infrastructure and stuff. So like, where does the Polymarket Kalshi on-chain, in parentheses with the Kalshi on-chain, but like more crypto nativeness than some of these other apps that have the users? And like in a year from now, are we going to see Robinhood dominate volumes on their own infrastructure after they build everything out maybe on their Robinhood chain or Hood chain? Where do you guys see the growth from here going?
I'll kick it off. I actually think you can make a convincing argument that like Polymarket and Kalshi's share of like prediction markets is probably top. I don't think either of them have like hit escape velocity in the sense that like their liquidity is just so much better than every other or better than each other that you have to go to that platform. To kind of Sam's point that he was making before, that like generating liquidity for this is going to be very tough, and like I don't think market makers are going to really be willing to really step in until like you have like significant retail flow on these platforms. So that gives like a huge leg up to Robinhood. Like if Robinhood can convert like its massive like options user base into like trading prediction markets instead, which is totally plausible, right? Like prediction markets are just a form of option. They're just binary options. So if they're able to do that, like, yeah, maybe the value flows to Robinhood. Maybe they build their own prediction market on Hood chain or something like that. I think that's entirely possible. For like Polymarket or Kalshi, like convincingly win out, like I think you need to see one of them just like significantly pull ahead in terms of liquidity. Like I think that like long term will be the deciding factor. I think there will be a moat around liquidity or in prediction markets that you don't see in stuff like DEXs, right? Like Uniswap, it's very easy to move your LP position from Uniswap to Sushi Swap or something like that. They're very fungible. The same cannot be said for prediction markets because of differences in Oracle disputes and whatnot. Like technically speaking, a yes position on, and we saw this play out actually with the Super Bowl, right? Like a yes position on Cardi B performing at the halftime show is not fungible across like Polymarket and Kalshi. So there could be some moat there. I don't think either platform is like pulled out ahead enough to like actually like establish that moat. So I do think there might be an interesting opportunity for like a more on-chain, maybe like DeFi plugged in, like prediction market to emerge.
Ryan, do you think Kalshi being like federally regulated is a decent moat, or is Polymarket pursuing that as well now?
No, I don't think it's an actual moat.
Do you think it not being on chain is a moat?
No.
I question if it being like a centralized authority makes it easier, because like most prediction market users in this like ideal scenario we're painting out probably don't care about the on-chain aspect at all, and if anything it just introduces more complexity, like the having a wallet going. I mean, like we'll have Polymarket US soon, but using a VPN, I don't think that prediction market users are crypto users necessarily.
I agree, but I think you can present an on-chain experience in a way that you don't need to know you're on-chain.
That's the goal. Yeah, I don't think we have that today though with Polymarket. I feel like it's a very clunky experience.
Yeah, with Polymarket today, yes, but like I think there are other examples that like the on-chain part is very abstracted away.
There is a very interesting advantage though to like being a prediction market that I think it makes sense for like the other sports books to at least like pursue it. Like unless regulation changes, but as it is today, like you can use it in any state in the US prediction markets. 18-year-olds can bet on it. With sports books, it's 21 plus. And so like I think that there's an aspect here where it's like advantageous to run your sports book on a prediction market over just like a traditional like sports gambling platform. And so I wonder if like that is also an incentive for DraftKings and FanDuel and whoever to kind of move their infrastructure over.
Yeah, 100%. You see that and I think this is going to be a long legal process. I think it's Kalshi who was getting held up in the state of Nevada and like all the sports books and the casinos and everything is pushing back because they had to play the long game and fight the fight of like in each individual state getting the rights to have like a casino, have a gambling. Like even here in New York, you can't do college football player prop bets. But like in other states you can. But like on Kalshi or Polymarket, you could just do that today. So I think that's going to be an interesting like race if Kalshi and Polymarket can kind of get a PMF. I think they already kind of have gotten that, but before those legal battles really start affecting their business and maybe in a couple states they lose, and it's going to be interesting if they can race to get that PMF first before the legal battles really start to tick up and cause a little absence of volume. Where do we see permissionless markets come into this? Obviously, all the markets on Polymarket and Kalshi are curated. That's probably definitely going to be the case for the Robin Hood integration, or if they go and build their own one, obviously with DraftKings, and if they build more sports betting ones, that's going to be very curated. But do you think there will ever be a bid for I could go and spin up a market on the number of reports Sam is going to publish in March? Obviously, that's a very niche case, but just an example there for permissionless markets.
I feel like that there is like an interesting use case there, or for like opinion markets or things like that. I don't think that we necessarily, again, have the confirmation that there's a lot of demand for it for something like opinion markets or like permissionless, like long tail prediction markets, but I think it's an interesting thing worth exploring and probably a good thing for like crypto projects to tackle, like something a little bit more long tail. Try it out with DeFi users who are more predisposed gamblers.
Yeah, wouldn't that more depend on the Oracle? Because I would imagine that's the limiting factor more than anything.
In like what regard?
In like a long tail, say I wanted to create a permissionless market. Like what's preventing me right now is not necessarily the curation. It's
how do you prove that I wrote 5 reports or something?
Exactly.
Yeah.
That infra has to be set up rather than more than the market itself, I think.
Yeah, I mean, if you can create a scenario where like you put in those conditions programmatically, or you track it, or there's agents that track it, I think it's doable.
Yeah.
I would say like permissionless prediction markets, I think there will definitely be there's something there, but I think it's going to be like extremely niche, like basically like think of like side bets you do with your friends and whatnot. I think like maybe the first case of like it breaking through will be like maybe through like streamer markets or something, right? Like let's say, I don't know, who's like a popular streamer right now that plays video games or something. Like let's say Jinxie's playing Rocket League and he was going up against, I think it was Musty, right? Like if I wanted to do like a permissionless market there, maybe like in stream, like spinning up really quick. I get this is kind of like the Pumpkin thesis. Like I think something like that can work. I don't really ever see like a scenario where like permissionless markets like drive a ton of volume. They're going to be like just more like smaller niche things. I think like the bigger markets will end up all be curating because I think it's going to be pretty obvious like what markets we want to speculate on. But that's not to say I don't think like there will be successful like permissionless markets. I just don't think it's a massive opportunity.
I think that there can also be like a separation in the standard between either permissionless or long tail and like the more popular markets. It'd be very cool to get to a point where the longer or the more popular betting markets were fungible, whether it's sports betting or politics or just a major event like Super Bowl halftime performance, things like that. It'd be very cool to have those be composable and to have them be like fungible across platforms even. Although I don't know if that's necessarily beneficial to the platforms themselves. They probably benefit off of the like it being exclusive to their platform, like the standard. But I do think that would be maybe like a cool opportunity for a permissionless or a decentralized prediction market to pursue.
What would that enable?
Composability, just more integration among DeFi.
I see.
Yeah.
Because I imagine, like, what would the use case be? Because usually that would enable like borrowing, but you probably wouldn't want to borrow against your game.
Looping, people do. I mean, I think that there's a ton that you could probably do, right? Borrowing against it for like a USDC line if you had a lot of money and
Like
I don't know, will Jesus Christ come back this year and you want that 5% yield? Maybe interest rates aren't always high for I don't know. Like it's cool. There's very few like fixed rate opportunities in crypto. So I wouldn't be surprised if we see like prediction markets kind of fill that void.
Yeah, that's interesting.
I would say that there are some like prediction markets assets that are probably like worthy collateral. Like I would imagine like you would be able to successfully lend against like 2028 president elections, assuming it's like generalized, right? Like let's say you probably couldn't like lend out against like maybe JD Vance, yes, but you could probably lend out against like Republican, yes. Like I and then obviously like you would just have to have like the funding rate like be a function of like time to close. Like as you get closer to market close, like funding rates need to go exponentially higher. But I don't see like fundamentally why you wouldn't be able to lend out against like a Republican yes or a Democrat yes for 2028. Like presumably that market is not going to be any more volatile than some of the stuff we already offer leverage on.
Yeah, kind of a good segue into the next question. Like, do you think there's going to be demand for perps on top of prediction markets? Obviously, we see like HIP4 going to the binary market stream. I don't know if they're going to allow perps on these positions yet, but we're seeing some teams very small start to explore prediction market perps on like sports betting, and then we also had Caleb, previous Messari analyst, published a nice piece on like it seems to be possible. Great report, I think he published in like September-ish, and go read it on Messari.io. But yeah, what do you think about the demand for getting some leverage on top of these positions?
Well, I think my position is it has to be a continuous stream of information to do actual perps. Like you can't do something that's like just a binary outcome like out in the future where there's not going to be like a variation in outcome, a very short-term basis. I think that's nearly impossible to do a perp, and there just won't be much volume, and people just default to existing binary markets. So then the question is like, what does have a continuous stream of information? And there are a lot of things, but I think none of them are like really being traded right now. Like I think you'll hear like some interesting ideas like GPU price per hour, like as a stream of info, and like you can build a perp on that. And like that goes more towards the derivatives market that we were discussing earlier versus like, sports betting, or like there are attempts for some sports betting, just like, like it could be like how many steps the running back take on the field, and someone's like tracking that in real time. And then like that's the price feed. Well, like I don't think we've seen tons of volume on anything like that right now. And I think like no one's really cracked it yet, but there is like an opportunity for sure. And I think perps, getting leverage is just like a natural extension of anything that has demand to be traded on spot that's continuous. So like that's like really the bottleneck, is finding what people want to bet on in real time. And then I think perps are easy to do once you have that.
So it sounds like you're making a case for not really the like binary outcomes, but also like the attention markets themselves. And we saw that with like Noise over on MEGETH building out that with their like Kaido integration and like being like permalong Elon attention or Taylor Swift attention. And there's also someone building this over on Monad called Trendle. And they're also doing like where they take in a ton of different like Reddit, X, YouTube mentions or whatever, and build an index around it and being like permalong Trump attention, whether that's good or bad attention. And so like, do you see there's a use case there too?
Yeah, I think it's the same tech and premise, honestly. And like attention markets are prediction markets. And like, I think it's a great experiment, and I think there's potential, and like, we just need to see execution and volumes realized from there. And then, like I said, I think perps will come after that. But yeah, attention markets are just prediction markets. They're probably more tracking entertainment type topics to start, but could then transition to more financially relevant, metrics that are, useful for derivative markets or hedging.
I'm bearish on perps for prediction markets. I don't think people really want too much leverage. I think rather people want to or maybe more sophisticated actors want to be like more capital efficient, right? Like, let's take 2027 Super Bowl winner odds. Like right now, no one's really going to be allocating to that market because you're effectively just locking up your capital for quite a while. I think there's much more demand for like being able to one allocate in the sense that like let's say I think the Rams are going to win next year, right? Like even if I think that and it might be a good price, I still might not be willing to sacrifice like my liquidity there. Like I have to lock up that position basically or sell it. I think if you made it that like I could go buy Rams and then like borrow against that and be capital efficient in that way, I think there's much more demand for that than there will be for perps. Particularly, I think this is interesting like when you get like really far out markets. And to like actually enable like efficient markets there, you probably need some sort of like borrowing function.
Yeah, but isn't that part of the reason some of these like sports betting markets have found PMF? Because currently, if I wanted to go to DraftKings and bet yes on the Rams for 27, that's definitely locked up till the game ends. And like as soon as I hit buy, like I either got to cash out for way lower, or I'm locked up indefinitely. But with prediction markets, they might be at 1% or let's call it 10% today. A week from now, they sign some new big wide receiver and they jump up to 10% or 20%. And now I've doubled my position and I can get out.
Well, correct me if I'm wrong, but I think like FanDuel and DraftKings like offer cash out options. So it's not more so like trading the movements. It's more so like being able to like take a position on something while remaining capital efficient. Like that matters a lot less for something that's going to resolve in a day. Like you probably are not going to need the capital urgently over a 1 day period. But like I said, like imagining like trying to allocate to like Super Bowl champs in 2027. Like you might need that capital. You will probably need that capital over like a 360. Like the chances of you needing that liquid increase exponentially like the more time you add to something. So yeah, like I think the use case there is not necessarily just like wanting to trade like price movements, but more so like being able to allocate to longer term positions while not sacrificing your liquidity. Like let's say realistically you wanted to like create a market that was like, will a nuke deploy by 2050? Like the actual odds for that will not be correct because no one is going to be willing to underwrite something of that long of a time frame. But if you're able to borrow against that position, now you actually might be able to like have the have the pricing for that actually approximate the actual odds of that event happening.
Yep. No, that brings up a good point. And like, where do these become, or some of these longer tail ones become similar to like bounty markets, where not necessarily a nuke, but like a streaker in the Super Bowl, where now someone could go bet yes, there's going to be a streaker, show up to the Super Bowl, streak, and then you're like you kind of play your own hand and you get the reward, even if you have to go pay a fine or whatever. Obviously, not supporting that. But where do we think like those go? Is this different than bounties? Is the prediction market infrastructure better for those anyways? Is that okay? And we could also get a little bit into like the insider trading part of that these inherently have.
I think you, as a prediction market investor, you should really think critically about how easy is this market to game and how likely was there insider trading involved. And so, for example, I just bet on the market, will Lady Gaga show up at Bad Bunny's Super Bowl halftime performance? And I said no, because I was like, that's crazy. Why would Lady Gaga show up? But the question I should have asked myself is, why did somebody make a prediction market about Lady Gaga of all people to be in the Super Bowl halftime performance? And why is it trading at 85% yes? Of course, the ROI on it being no is great. And so like, should it be wrong? It's like, that's interesting. But I really, you should over-index on if insider trading was involved when you're trying to trade these markets, especially if they are deterministic. And I think that's kind of the way to play them. But I do think that in some ways, they're like a workaround bounty market. They are a bounty market that you can bet on and like have like equity in or get exposure to, which is interesting. Like there's an aspect of that is cool, whether or not I think a lot of people want it or not, or want like a like level of like hyper financialized gambling. But I think that maybe an interesting model to explore would just be a more direct bounty and ask, like, if you're like, here's a certain amount of money if you go and streak on the field of the Super Bowl or something. I don't know, but people, I guess there is some demand to bet on that.
Yeah, it kind of introduces meta, because like I saw the does Jesus arrive in like 2026 or something, and it shot up to 5%, and everyone was wondering why it shot up to 5%. And
Yeah, who has that
I don't
inside
know if
info?
it's yeah, I don't know if it's true or not, but someone said it's because there was a second market created to say if there it was gonna go up to 5%. Whether it was true or not, I think it's interesting that there could be meta markets for these original markets. It's like CDOs on CDOs during the 2008 financial crisis.
Yeah, it's like that scene from The Big Short where
Yep.
they're all like taking fourth and fifth and sixth level bets on top of the one hand of blackjack. But yeah, I guess the insider trading question kind of like gets you down to like what you think prediction markets actually are, like whether or not it's like another like equity investment of like who's going to win the Super Bowl, or is it a source of truth? Like, do you actually want to know whether or not Lady Gaga is going to perform during the Super Bowl? Like, you're almost wanting there to be, obviously, if you're playing the other side of no for Lady Gaga, but you're going to want to know what's the truest odds of that happening. And there's a ton of like regulatory stuff that they have to get to, like how many NVIDIA GPUs are they going to sell is like way closer to an equity than whether or not Lady Gaga is going to show up at the Super Bowl. But you almost want, like, if you're just checking it as a source of truth, obviously like the ticker at the bottom of CNBC and CNN to say like what is the probability of a strike in a country, or like will like the union go on strike and type of stuff. Like it just kind of depends how you want to use that as a consumer of the platform. And so it's an interesting debate, and I think it varies per category.
Yeah, totally. Like, I don't think there is like one universal answer to like insider trading with prediction markets. I think if the market is offering a public good, you probably actually do want insiders trading it. Like, whether or not Lady Gaga performs at the Super Bowl is clearly not a public good. So yes, you probably do not want people insider trading that because it just ruins the market. People will not be willing to speculate it. But going back to like what Corbin said, like, if there was a prediction market for like will there be a major bank collapse in like 2008, you probably would want insiders trading yes on that, so that like that information can signal a lot faster. So there's definitely like nuance in trying to like figure out which markets actually provide some sort of public good. But I think that's probably like a good like compass to have here. Like if that market is delivering some sort of public good, yes, you want insiders trading that. If there is no public good derived from this market, which I think you can argue for like maybe most like sports, entertainment, culture markets, then no, you definitely don't want insider trading there.
I feel like that's like a very subjective question. Like, what is a public good? Like, maybe it is good that insiders aren't trading that the banks are about to collapse, because that gives more time for the banks to find a solution, and then that doesn't cause a systemic collapse that leads to a recession and a lot of people losing their jobs. So like, I feel like you can't make an objective evaluation there of what is a public good. And like, it's either like no prediction markets or like insider trading is just intrinsically part of them.
It's a public good to the observers, but not a public good to the counterparty that's getting rugged.
Would have it been a public good to have a prediction market like who was going to be in the Epstein files?
Well, if it's I mean, then that, like, you could make an argument it's always negative to someone, like maybe based on public information, or like maybe people are trying to manipulate, like, here's my rival, I want people to think that they're in the Epstein files, but they're not actually in there, so I'm going to bid this up, and like the money doesn't mean anything to me, but their downfall would be very advantageous to me. So that's like, how is that a public good? I think like there's just so many ways where like almost no one ever has universal interests in common. And like, there's so many variables that could affect whether what you think is even in the public's interest actually is in the public's interest.
Also, are we just supposed to assume that, like, in most cases, when something is like near correct, like even before resolution has occurred, that it's it might be most likely true, but should we just go forth and assume that it's true? Like, if there's an 85% or 90% chance that somebody's in the Epstein files per prediction markets, does that not kind of affect how we all view that person, or how we all view that? Like, I think subconsciously it does. So maybe there's an ethical element to it too. That's probably worth considering.
Yeah, and then like, I guess you can even like, you could take the metagame even like one step further. Like, at a certain point, if like insiders become like a prominent feature of like prediction markets, like LARPing as an insider will then become like a profitable trade as well. Like, I'm pretty sure you have seen this example in other or maybe not exactly, but like, wasn't at some point like people were just like fake callings around like Washington D.C. to get like the pizza meter thing up, and then like they would take yes on like will there be a military strike and then dump that. So like perhaps the most interesting part of prediction markets is that like they actually just enable infinite meta games, and like if the meta shifts too hard in favor of like insiders, then you can use that to your advantage. If it shifts too hard in favor of like not using insiders, then it becomes an advantage against like I think I don't know exactly where I want to go with this, but like there is like infinite metas within prediction markets that are like probably underexplored.
I mean, we've seen that play out in prediction or in perps too, right? With like all of like the supposed insiders on Hyperliquid, because it's like a transparent order book. There's no dark pools. So I think that like people clearly love looking for insiders. I think that it makes sense. There's demand for it. I just think it's not a very profitable strategy, because the second you mess up, people know that you're not an insider. It's completely binary.
It's also so easy to pretend that you're an insider and manipulate the market. And like that is a giant vector that like I guess it gets priced in eventually, but like people will start doing this, and then like that kind of resets the, is there an insider, is there not an insider?
Yep. All right, as we get close to time and wrap here, we'll go quick around the horn. Do you think total notional volume across these platforms will grow from here through the end of the year, or decrease from here to the end of the year? Ryan, I'll go you first.
You're saying by December 31st, 2026, correct?
Yes. Will there be a weekly candle higher than this last weekend at the Super Bowl?
Significantly higher, I'll say.
Sam?
Order of magnitude higher.
I think midterms pop off. So maybe equal or like a little higher, a little lower, but I think beyond midterms, probably not.
Okay. So you're a no except for the midterm week.
I'm a no or somewhere very close to it.
All right. I like it. Corbin?
I'd say it maxes around 30% above current levels.
All right. Dylan?
I think it's going to be higher. I don't know by how much, but they have so much money and not much to build with it that they're going to induce higher volumes.
So
I like it. What about, okay,
fake?
We'll go. I'll watch volume. No, I'm just kidding. 2027, higher or lower than 26?
I think it goes much higher every year for a long time. So that's my answer.
I'll be contrarian and say local top here.
I like it.
Yeah,
it.
I
Corbin?
think it's pretty much maxed out here.
Definitely higher. It can't go lower. Like, that doesn't make any
It
sense.
can definitely go lower. If you don't have
right.
Logan Paul shilling it to 13-year-olds, it can for sure go low.
What an end. What an end.
Promise to come back here February 10th, 2027 and see who was right.
Exactly. And then we'll come back February 10th, 2028 and have the same debate. This has been an awesome episode of Shoot the Shit Pod number 20. As always, none of this is financial advice. Do your own research. You can do your research on Messari.io. A lot of these guys have some great reports coming up here in the short term, and we'll see you guys in a couple weeks. Thanks.